Hello, great talks. Today we're looking at accounting paper 2 from November 2023. But just before we begin, please ensure that you have pressed that subscribe button and you are going to hit the like button. Okay, so we are going to focus on question 3, which is budgeting. And as you guys know, we need to be mindful of time. Here we're given 30 minutes for only 40 marks. Right, so the information relates to Sunday Stores Pty Ltd, and the business is owned by Adam Stevens. So we are required to refer to information B, that's 3.1. So identify two items that were incorrectly recorded in the cash budget. Right, so we're dealing with the cash budget. Now remember that in the cash budget, we're looking for all things cash, right? We're looking at the cash basis here. So we're looking at cash. If anything is non-cash, then it is incorrectly recorded. Then secondly, I needed to identify two items in the cash budget. Right, so these are things that would be in the cash budget but would not appear in a projected statement of comprehensive income. Now remember that the statement of comprehensive income deals with the accrual basis, right? And it doesn't necessarily have to be on a cash basis. Right, so we're going to look at information B so that we can be able to identify those things. Now, information B, we're given an extract from the cash budget prepared by the bookkeeper. So we are given the receipts and payments along with the November 2023 balances and the December 2023 balances. Okay, so remember that for the first bullet point, we're looking for two items incorrectly recorded in the cash budget. Right, so the first two things that we could be looking at here is our discount received. If we can look at our discount received, then any other thing that is non-cash that we can see here is the depreciation, because we are not making any payments of depreciation. Depreciation is just a calculation for the business. And also when we look at our bad debts are also a non-cash item. Remember that the discount received, we do not necessarily receive any amount, but we are just it's just a reduction in price, right? So the discount received is just a reduction in the price that we are supposed to pay. We are not necessarily receiving anything, right? So now that we have identified these things, we can only just name two. So we can go to our answer book. So two things incorrectly recorded in the cash budget. We can have our discount received. Then here we'll have our depreciation. Right, so that's our depreciation. Then now we need to identify the two items in the cash budget that would not appear in the projected statement of comprehensive income. Right, so going back to information B, the first thing that I am seeing here is the cash from debtors, and then next is the payments to creditors. Those two are based on the cash basis, right? So here they just want to see if you know the differences between the income statement and a cash budget. So what would appear in the cash budget in this case would not appear in the statement of comprehensive income. What would appear in the statement of comprehensive income, such as depreciation, should not be appearing on the cash budget, because the cash budget deals only with cash items. Non-cash items are not included in the cash budget, right? So here we have the cash from debtors and the payment to creditors. So we're going to start with the payment to creditors, and then we have the cash from debtors, right? So those are the two things that we have noted for the second question, and that's our 4 marks. Then we're going to move on to 3.2. Right, so 3.2 says complete the debtors collection schedule for 2023. Right, so let's see which information we are going to use. So with the data schedule, we have information A Information A is an extract from the projected statement of comprehensive income. Then we have sales, cost of sales, rent expenses, discount allowed, depreciation, and our bad debts here. And then information B that we were given is extract from the cash budget, just like we have seen. But information C is what we will be using to do our debtors collection schedule. So now we have the credit sales, which comprise 60% of total sales, right? That's the first piece of information. We know that from the total sales, only 60% will be credit sales, okay? And then we are told that debtors pay according to the following trends. Now, 40% is collected in the month of sale. And then those people receive a 5% discount. So we need to take the discount into account. Then we have 50%, which is collected in the month following the month of sale. Then 8% is collected 2 months after the sale. Then lastly, we have 2% that is written off as irrecoverable in the 3rd month after the sale. All right, so let's look at our schedule so we can be able to work on these figures. So we have sales that were done in September. We are already given the credit sales here, so we don't really need to calculate. So now we are doing the debtors collection schedule for December, right? So let us have a look at the question once again so that we can be sure. Right, so we are doing it for December 2023, right? So the first thing that we are noting is that we have had sales done in September, right? So sales that were done in September, we know we had September, October, November, December, right? And this is the 1st month after the sale, 2nd month after the sale, 3rd month after the sale. As you can see, this is the 3rd month after the sale, and when you go back to check, they said 2% is written off as irrecoverable in the 3rd month after the sale. So in December, we are not collecting anything that was sold in September, right? So these are bad debts. We cannot record any amounts as being recorded, right? And then now in October, okay, we're going to have October, scratching out September. We have the 1st month after the sale, the 2nd month after the sale. This October is the month of the sale, right? Now, what we are going to collect in December, we know this is 2 months after the sale. We go back to the information just to ensure that we're getting correct figures. They said 8% is collected 2 months after the sale. So we're only collecting 8%, right? So we're going to calculate 8% of 640,500, right? So that's 8% times 640,500, which is 51,240. So there we have 51,240. Right, now we're going to look at November. When we look at November, we have only 1 month after the sale, right? We have 1 month after the sale, and 1 month after the sale, we are only collecting 50% is collected in the month following the month of the sale, right? So we have 50%. So the 50%, right? So this 651,000 multiplied by 50%. Okay, so that's 651 multiplied by 50%, which is 325,500. So that's 325,500. Okay, then now we're going to look at December. So in December we had credit sales of 682,500. Of course, we cannot collect anything in November because it's a past month, so we're already given the total here. Now in December is actually the month of the sale, right? So we had 40% being collected in the month of the sale, and those people receive a 5% discount, right? So only the 40% of the credit sales will receive the 5%. So that is why we're going to do this. We're going to take, right, let's just have some space first. So we're going to take the 682,500 total credit sales multiplied by only the 40% that we are going to recover, or we're going to receive, multiplied by 95%, because it is only the 40% that is going to receive the 5% discount, right? So now remember that the 95 is coming from the 100 minus the 5% discount. Okay, so we're going to have 682,500 times 40% times the 95%, and that gives us 259,350. So that's 259,350, right? This looks like a 3, so it's a 5. Right, then now we're just quickly going to sum up what we are going to receive in December, and that is 636,090, and that's your debtors collection schedule, as quick as we can do it. Okay, now we are going to look at the next question, which is 3.3. 3.3 says, refer to information A and B. Calculate the amounts indicated by Roman figure 1 to Roman figure 4. Then let's have a look at information A and B. Right, so information A, just before we looked, it says extract from the projected statement of comprehensive income. We have sales of 1 million in October, 1,067,500, 1,085,000, then 1,137,500 in December. Okay, so we will be using all these amounts: cost of sales, rent, expenses, and so on and so forth. And then in information B, that's the extract from the cash budget, like we have looked before. So now what we're going to do, we are going to calculate the amounts that they want us to calculate in this cash budget. Okay, so now question 3.3, we're going to calculate first the discount allowed in November 2023. Okay, so we're going to look at the discount allowed in November 2023, going to information A and B. So we have the discount allowed here, Roman figure 1, in November 2023. So the discount allowed, we are going to look at December. So in December, we had the discount allowed of 13,650, right? But what we need to check is how much we have given in November, right? Remember that the discount is 5% because we give a 5% discount. So it was here on our information C, we give a 5% discount on the creditor. So we need to determine how much discount did we give to these debtors. Okay, so let's go to our debtors collection schedule that will help us. Right, so we had credit sales of 651,000 in November. Okay, so let's get to work. We had credit sales of 651,000. Right, so those are our credit sales for November. And then now we know that in November, the month of sale, what we are supposed to receive is 40%, and then now we are giving a 5% discount. Right, so then let's look at 651,000 multiplied by 40%, should be 40%. Okay, multiplied by the 5% that we're giving out, which is 13,020. Okay, so it's 13,020. Let's just take this working and get it to our answer book. Okay, we'll just have that there, 651 multiplied by 40% times our 5%, and then there we have our discount allowed of 13,020 in November 2023. Right, and then now we are going to calculate Roman figure 2, which is our in December 2023, the interest on savings. Okay, we're going to look at the interest on savings. We know that in November 2023 it was 1,200, and we need to look at what is the difference between the two. Okay, now when we look at the rest of the information that we were given, looking at information F, right, remember that our information is not only limited to A and B, but the figures that we need to calculate are in A and B, but the rest of the information is still relevant to the question. So looking at information F says the savings account will be increased by 84,000. So we are increasing the savings account by 84,000 on the 1st of December 2023, right? So that's only the 1 month. Now the interest is at 4% per annum. This is per year, right? Per year. But remember that we are only calculating depreciation for only 1 month. Now, interest at 4% per annum is not capitalized and is receivable at the end of each month, right? So we are going to receive the 4% interest per annum at each month. Now, the extra interest that we're going to receive, we know that the previous one was 1,200, like I said. What we are just going to calculate is the one for December 2023. So now what we're going to add, we're going to take the 84,000 multiplied by the 4% multiplied by 1 over 12 months, because this is only for 12 months because they said per annum. Now the extra interest that we're going to receive is 84,000 multiplied by the 4% times the 1 over 12, which is 280. But we know that the interest before was 1,200 in November. So now it will be 280. Okay, so let's have the 280 plus the 1,200, and then that will give us a total of 1,480, which is our interest on the savings account, like they said here. Right, now we need to calculate the payment to creditors in December 2023. So when we look at our creditors, we are given information about them in information D. So information D says purchases of stock and payments to creditors. So that's what we are dealing with now. The markup percentage is 75% on cost, right? So the markup is 75% on cost. So we know that in that case, 100% is cost. Then our markup is 75%. So that's our markup. Then we have 175% as our selling price. Right. Now, we are told in the second bullet point that stock is replaced in the month of sale. So a base stock is maintained, right? Stock is replaced in the month of sale. So whenever we sell, we will also be able to purchase stock. And then now all purchases of stock are on credit. We buy everything on credit. So creditors are paid in full 2 months after purchase. So we pay 2 months after the purchase, which means when we pay in December, it means that we have purchased in October, right? Because we would have November here. So October, November, December. This would have been the first month. This should have been the second month after the purchase. So we're going to look at what we have bought in October, right? So let us check what we bought in October. Right, so now what we had in October as our sales, rather, we were given the October sales. Okay, but let's first look at our credit sales here. In October, we had these credit sales of 640,000. Okay, 640,500. Those were our sales, but we need to determine the cost of sales, right? We need to determine the cost of sales, but remember that these are creditors. Okay, these are creditors, or credit sales rather, credit sales. And first things first, let's determine the total sales. Remember that when they told us that 60% of total sales is credit sales, now we're going to determine the total sales. So the total sales in October, should be 100%. It's what we want over what we know. And then we're going to have the 640, 500 times 100 over 60, which is 1,067,500. Okay, so these are total sales, right? And remember that we need to determine the cost of sales. What is the total cost of sales? We need to determine the cost of sales so that we can be able to determine what we have purchased in October. Remember, we're dealing with October, but we are calculating what we will pay in December. Hope you're still following. So then now we have the 1,067,500 multiplied by, right? So now you need to think about the markups and the cost of sale. Remember that this should have been the selling price because it's our total sales multiplied by what we want over what we know. What we want is our cost of sales over what we know, which is our sales as 175. Right, then we're going to quickly calculate our cost of sales for October, which is 610,000. Okay, so that's 610,000. That's what we are going to pay in December rather, but we have bought in October. Remember, they told us we are paying 2 months after the month of purchase, so it's important to keep all those factors in mind. Now we're going to calculate the rent expense for November 2023. Okay, so we're given the rent expense information, which is information E, because I see it's the only piece of information we haven't really highlighted. So information E, we are given rent expenses are expected to increase by 13% from the 1st of December 2023. Okay, so when we look at this, it's the rent expense in November 2023, but when you look at December 2023, we are already given the rent that includes the 13% increment, because they said rent will increase by 13% from the 1st of December 2023, which means since it includes the 13%, we are going to say the original rent should have been the 100%, right, plus the 13% which is included in the rent for December. Now simply means that this one should be our 100%. We're still going to use what we want over what we know. Now we are then going to have our rent expense calculation is 31,640. That's what we paid in December, multiplied by what we want over what we know, right? Then now we're going to have the 31,640 multiplied by 100 over 113. Then that gives us the rent in November for as 28,000. Okay, so that's 28,000. And then now we need to move on to the next question, which is 3.4.1. Okay, so we need to refer to information G for this one, budgeted and actual figures. So here there'll be definitely some commenting. Remember, just before you comment, just make a note for yourself that you need to quote figures. All right, so you need to quote figures. Then you also mention trends, because this is what will give you max marks, right? And then wherever you are required to give reasons, you will then give reasons. Now 3.4.1 says, in order to increase sales, Adam decided to change the way in which the salespeople are paid each month from 1 November 2023. So the salespeople agreed to change. Now, the first bullet point says explain the changes that Adam made. Second one says explain why some of the salespeople regretted their decision to agree to these changes, then quote figures or show calculations. And then the third one says Adam feels that the decision has benefited the company, while sales manager Millie is concerned that it did not benefit the company. Provide 1 point with figures or calculations to support each of these opinions. Okay, so we're going to begin with the first one, explaining the changes that this guy has made. Right, remember that we're dealing with the way in which they were paying the salespeople each month. Right, so let's go to the information G. So we have budgeted and actual figures for November 2023. So we have an average number of customers that was budgeted. We had 480 budgeted, and then we actually got 640 customers there. And then now we are looking at the salaries of salespeople. We had the budgeted of 165, and then we had an actual of 20,000 rand. So Adam reduced the salaries that were paid to the salespeople, but then now they were paid also commission to sell, right? They budgeted 0, but they actually paid 141,050. So now what we can see is that they changed from salaries to paying them commissions, right? So they actually paid them based on the sales that they made. Okay, so I just want us to quickly see whether this 20,141.50 will actually amount to 165,000. So when we look at 20,000 plus 141, okay, that's 20,000 plus 141,050. So a combination of this is actually 161,050. So we will be able to use that after our comments. Okay, so now we need to explain how these changes came about. So let's go to our answer book so that we can be able to answer. Now, the first thing that we noted, we know that Adam changed from paying salaries to paying the salespeople in the form of commission. Right, so that's the change that we have noted, right? So or we can just say salaries. Also, the salaries were reduced to 20,000 in total, right? So that's the change you have noted. Then now, looking at the second block, it says explain why some of the salespeople regretted their decision to agree to these changes. Quote figures or show calculations, right? So now, when we look at what they have been paid in total, like I've just calculated, the total that they have been paid actually was 161,50,000. But when we look at what they were getting in salaries, was actually higher as 165,000, right? So now they're earning around about 4,000 less, right? Around about 3,000, 4,000 less. So we need to state that. So actual amount, okay, so actual amount paid to the salespeople. Okay, this was the commission, was 161 and 50,000. That's the two amounts that we added. But the salaries, okay, let's say budgeted, were 165,000. Okay, so now the salespeople earned Okay, now let's calculate the difference. So it's 165 minus 161050 and 3000. Okay, so that should be 3950 less before okay, they earn 3950 less. Okay, so we could have said they earned 3950 more before the change was implemented. Okay, so this was 3950 more before the change was made. Okay, so this is why they would be maybe disgruntled, or maybe they would not be happy. So you could also go as far as calculating the percentage. I don't know, maybe calculating the differences between the two, or maybe saying the customers, because also when you look at the number of customers that we had budgeted was 480, but they also got an actual of 640. So they're actually getting paid less. I would say they're getting paid less than what they've actually worked, because they got more customers, but their pay actually reduced by 3950. So you could also mention that that they got to have much more customers than what was budgeted, but they got then paid less, right? So then we are going to move on to the next bullet point in our question, which says Adam feels that the decision was the decision has benefited the company, while the sales manager Millie is concerned that it did not benefit the company. Now we need to provide 1 point to support each of these opinions. So we're gonna talk about with Adam first, right, as to why this decision benefited the company. So in the terms of Adam, who is the manager, we're going to look at the cash sales, right? The cash sales, or not the cash sales, rather, we're going to look at the average number of customers, and then we can also talk about the total sales, because the total sales increased. Also the saving on the cost of paying these commission expenses. Okay, so the commission or the salaries expenses rather. So now we're going to talk about Adam. All right, so now we're supporting Adam's opinion. So Adam opinion, we said the actual number of customers increased by, okay, so now we need to determine the difference between the 640, so what was it, 640 minus the 480, which is 160,000. So it increased by 160,000 from the budget of 480 and the actual of 640. So we were able to attract much more customers. Okay, and then now we can also look at the total sales, right? So we can look at the total sales as they increased from 1 million, or they increased from 1,085,000 to 1,410,500, right? So let's talk about the sales also. Okay, but they just said one reason, but this is just for learning purposes. So we said total sales, let's say actual total sales are greater than the budgeted sales by, right? Now we need to mention the amount. So it was 1,410,000. Okay, let's just ensure the amount is correct. 410,500 minus 1,085,000, which is 325,500. Okay, by 325,500. Right, so actual, don't forget to state the figures, was 1,410,500. Then budgeted was then was the 1,085,123. Okay, so that's a zero there. And then now Millie, she then said, this didn't really work. I just want to read again. So Millie is concerned that it did not benefit the company, right? We need to support why it did not benefit the company. So let's go look at the figures again that we were given. So we were given the credit sales. Okay, when you look at the credit sales also increased from 651 to 1,668,700. Then when we look at the cash sales, there's a bit of a difference on the cash sales because cash sales actually decreased because we were budgeting 434,000, but we actually got cash sales of 341,800. Now, when we look at our cash and credit sales, most people preferred to buy on credit. But remember that when people buy on credit, there's a possibility that they might not pay, they might not come back to give us the cash. And also, when we are not able to have cash inflows, we might struggle functioning, we might struggle paying our own very creditors. So this is what Millie is concerned about, because as much as they were able to make much more sales, but the majority of those sales was only credit sales, it was not cash sales, right? So that is where her concern is. So we have a concern here on the cash sales. So for Millie, we had cash sales, actual cash sales less than the budgeted cash sales, right? So actual cash sales were less than the budgeted cash sales by, okay, so let's get the difference between the two. We had 434,000. Okay, so that's 434 minus the 341,800, which is 92,200. So by 92,200, so actual was 434. No, this is budgeted. So actual was 341,800. Then budgeted, we had that's 3,434. Yes. Okay, now that we have supported Millie, we are going to look at 3.4.2 and see what we are supposed to do on 3.4.2. Now, Adam is concerned about the escalating rent expenses and plans to purchase the property. So calculate the net effect of this purchase on the receipts and payments in the cash budget. And then lastly, we're going to give one reason why Adam has decided to go ahead with this purchase. Okay, so the first thing, we'll calculate the net effect of the purchase of this property on the receipts and payments in the cash budget. And then lastly, we're going to give one reason why he went ahead with this purchase, right? So one thing that we are going to first determine, we need to determine the differences between the receipts and payments such that we can then be able to give the reason why this person was able to purchase this property. Okay, so let's look at the information age that we were given, information relevant to the purchase of the property. So Adam plans to finance the purchase of the property by acquiring a loan and using the fixed deposit that matures. So the cost of the property is 2,500,000, and then We then have the fixed deposit that will mature on the 1st of Jan 2024, which is 1 million. And then they will then get the new loan from BK Bank on the 1st of Jan 2024, which is 1,500,000. And then we will pay an interest of 18,750. Okay, so now let's then determine the net effect of this purchase. Okay, so we know that the cost of the property is 2,500,000. We're going to have the 2,500,000 as a minus, and 2,500,000 minus. Okay, we have okay, let's look at this. Okay, we're going to have this as a cash inflow, which is the fixed deposit, and the new loan, that's also 2,500,000. Let's just show that as individual amounts. So that's the 1 million. Okay, that should be a plus because it's a cash inflow, plus the 1,500,000 also. And then now we look at the other transactions. What we have is the interest on loan of 18,750 that we are going to pay, and then we're also going to pay 12,500,000, right? So it is 12 million, nope, it's 12,500 and 18,750. Okay, so it's 12,500 and the 18,750. Right, for now, let's just quickly calculate and see what we are having. So it's negative 2,500,000. So this will net off together and will give us a 0. And then now when we have the negative 12,500 minus the 18, okay, so it's negative 12,500 minus the 18,750, which gives us a negative of 31,250. But now we still need to consider the rest of the calculations that we might have paid when we were looking at the net effect of the purchase of the property and the receipts, right? So these are the receipts, and then now when we look at these payments, these are the payments that we would have done, right? Then we still need to consider what we could have maybe saved on the rent expense. So then we are going to look at the information on our cash budget just to see and think about the savings that we might make and some of the stuff that we might lose out on. Remember that the fixed deposit is going to mature and we are no longer going to pay the rent expense since we are purchasing a property. So we will be saving the 31,640, which means we are going to be adding that, and then we are no longer going to get the interest on the fixed deposit because it will be now a saving, right? So, or it will not be a saving, rather it will just be an opportunity cost. We are not going to have the 7,500 anymore. We are not going to receive it. So we are going to take the 31,640 in because we are going to save that, right? So this is supposed to be a minus, and then here, okay, it's negative 31,250 plus the 31,640 minus the 7,500 that we are no longer going to receive. Okay, let me just ensure that my calculations are correct before I conclude. Plus 1 million plus 1,500,000 minus 12,500 minus 18,750. Okay, yes, that's supposed to be a negative 31,250, and then plus the 31,640 minus the 7,500, then that gives a total negative of 7,110. Okay, so this is the net effect from the purchase of the property, right? That's the net effect on the receipts and the payments. So it is negative, okay, let's get the negative here, 7,110, which is actually better than the rent expense that we could have paid. The rent expense of 31,640 which is this amount, which is way better. So now one reason why Adam has decided to go with this purchase is that there's actually going to be a saving on these rent expenses that he's worried about of them increasing every month. Okay, so one reason is that saving on the okay, let's just say savings on the increasing rent expenses. Right, then now we have reached the end of the question for cash budgeting. I really hope that was useful. Please do not forget to press that subscribe button, drop a like, drop a comment, and do not forget to share with friends and family who might need help with accounting. I'll definitely see you in the next video.